we have a presentation from Ada Srivastava. All right, Ada is going to speak to us about creating a smoother payment process to boost the trade finance in West Africa. Many of us are doing business across continents, and how do we boost the payment process to be sure that people get their money and we get our products. Welcome, Ada. Thank you very much.
Good morning, everybody. I hope you're doing well. You'll have to bear with me and whoever's in charge of the clicking because my slides are a little bit more... Oh, I guess I can do the clicking now, so that's okay. First of all, I'd like to thank the organizers, Terrapin, Seamless West Africa, Mali in particular, for making this happen. I would like to thank Ghana for hosting us and the Move and Pick Hotel. I know Prince Charles was here yesterday, so it's kind of cool that we're in the air of royalty in some manners. You know, England, the royalty of England is here and we're here, maybe it means something. So getting into the presentation, let's start with the agenda. So we will briefly do an intro so you know who's talking to you and why. We'll talk about what's currently happening, what's possible, what are the impacts of what we discuss in hopefully the next 2 days, and finally, after listening to, I believe, 15 minutes of me, what are the 3 takeaways, because I'm pretty sure you won't remember everything that's being said. That doesn't mean for the next 14 minutes you don't need to pay attention, and only for the last minute, I hope I can get all 15 minutes of your time. So let's begin with the intro. When we sit at our board meetings at Soleil, we have a very simple concept of determining who, what, where, why, and how. Basic questions that you need to understand to address any problems. So who? That's me, Ada Srivastava. I'm the Director of Trade Finance. I've been doing it for about 10 years. Academically, I started in my undergrad as a philosophy major, quickly realized you can't make money being a philosopher, so I entered into banking. And I got my executive MBA from Columbia Business School and London Business School. I'm ICC certified in documentary letters of credits, ACAM certified in anti-money laundering. In short, at my bank, I understand trade finance. What? We're here to talk about a smoother payment process. The smoother payment process we're going to evaluate from the view of the customers, the view of the banks and e-money and other wallets, and finally from the view of the recipients. Because in the equation, if you have customers and they want settlements to happen, there's also recipients of that money. Where? West Africa, for 2 reasons. One, this is where we are today, so it would be apt to talk about West Africa. And secondly, the 2 speakers before me have done a fantastic job laying out the numbers as to why this region is so important. So I'm glad that in my presentation, I don't have any numbers, so it's much easier to have the background already built up from the previous people. Why? In my presentation in particular, I'm going to talk about boosting trade finance, but the concepts that are discussed are applicable to any vertical. It need not apply to trade finance itself. So whether you're e-commerce, payments, mobile settlements, or even within the treasury of your own bank, you can use the ideas that I'm about to discuss in order to make positive changes. And the how, this is just, let's find out in the following slides. So let's talk about what's current, because as the other speakers addressed, you need to understand what's current in order to make changes for going forward. And I want to talk about something called the payment funnel. When we look at any transaction, it's not fair just to look at the settlement period or how long it takes for the settlement to occur. But when the customer engages with you to make a payment happen, how long does it actually take from their desire of the transaction happening to that final execution? I will show the payment funnel within trade finance because that's the scope I understand very well, but you can apply it to your own verticals how you see fit. So this is what the payment funnel looks like in trade finance. You have documents, which those in the letter of credit department know can be various, from just a few to even 10 or 20. We've had transactions in West Africa where there's being either importation done from China or Korea or exportation of some minerals, what have you, that can take up to 20 different documents issued by 10, 15 different agencies that all need to be there in order for us to even begin the conversation of when will the payment be made. Secondly, the issue we face is that all these documents need to be verified. These days, people have become very good with Photoshop, with making things seem legitimate when they're not, and it's a real hurdle. Because remember, from the consumer standpoint, this is all part of their payment process. It's not just a settlement, it's about the documents coming and then the settlement happening. Once all that is complete, you're happy with the documents, you're happy with the fact that they're all legitimate, all the parties have endorsed it, everything is agreement, then you finally get to the settlement time. Now this is whether it's settlement within the same country, within two different countries, how many correspondent banks are involved, it's all up to how the transaction is specifically structured. And finally you get to the payment actually being executed. What I want to bring and highlight is that typically, and sometimes at Soleil, we see that this can take up to 5 to 10 days. Now that's a shocking number if you consider what it means in terms of the consumer or the client's perspective of how long it takes a payment. Because in their minds, the payment is not just that arrow and the payment being executed after settlement time, but it's the entire process that they have to undergo in order to receive the money that they feel that they're due. And the way the funnel is made, it's actually really interesting because any improvements, any marginal improvements in the top bit of the funnel will make it more cylindrical. And that implies that you will have quicker payments even without making massive improvements to the settlement time. So if we have to look at all these things, we should keep in mind to look at not just from the bank's or the company's perspective of how long it takes me to settle, but even how long it takes to get to the point of settlement. So let's move to what's possible, because all these problems remain problems unless there's solutions, and there's no reason to talk about problems unless you can provide a solution. So first, and I think this has become really clear with the other two presentations, is that we need to shift away from documents and become more mobile. Banking and payments need to evolve that way in order for them to have any merit going forward. It's especially a problem in trade finance. I mean, in trade finance, one of the major instruments we offer is called a documentary letter of credit. It's kind of entrenched in the way the business is done. It's not called an electronic letter of credit. And one thing to note is that whether or not we like it or not, the shift is happening. So it's advantageous for companies, banks, others to realize that even though we like printing things on paper and it makes it feel more real, it's really not the direction that things are headed in. I think what will end up happening is that most banks and providers will need the physical copies just because they want to meet central bank regulations rather than how actually people do business. The second thing to look into is physical verification versus smart contracts. This is where we get more into the meat of how things are moving forward. There has been a lot of talk about using blockchain and open ledger, not necessarily for cryptocurrencies, which still central banks and other governments and agencies are still weary of how to regulate and mitigate, but what people can agree is that we're open and ready for a platform where all different people can upload the documents or contracts or agreements that are necessary in order to make the payment happen. Remember, it's all about shortening the time it takes from the consumer feeling that they've done what they need to the payment happening. Traditionally at our bank, what needs to be done is all the documents need to be mailed to us. Somebody in the office evaluates the document, make sure they're genuine. If it seems that there's any over-invoicing, under-invoicing, or any issues, to have to reach out to those parties in different countries and to verify. All of this takes time. In a blockchain or open ledger solution, everyone would be able to upload their part of the transaction, verify whether or not they believe what they've uploaded is genuine, and once whoever is the master in the transaction, in most cases a bank, sees that all parties have signed off on all the different documents, payment can then be made immediately. This cuts down huge on just time for FedEx or DHL or whoever to deliver the documentation, and it makes it very easy for all the parties involved to see who's not doing the job. You know, it's really easy to blame that it got lost in the mail, or the post office is not doing the job, or here's the tracking number. But to be able to easily identify which party is not holding up their end of the bargain reduces the time it takes in order for payment to happen, because you can specifically say, hey, this For example, this Chamber of Commerce hasn't given the certificate of origin. This is what we need. This is what's holding up the transaction and the payment itself. Finally, when it comes to actually making the settlement, the third part that many of you experience when you are doing cross-border payments is also super important. At the moment, the way that Soleil has to make payments is that we go to our correspondent bank, whether it's TD Bank, Citibank, JP Morgan, who then reaches out to another big bank in whichever country we need the settlement in, who then gives the credit to a local bank. This takes time, and people, as you know, are impatient, and they're not happy. Customers will tell us, we've made the payment to you, you've debited our account, why is it taking 3 days for me to be able to collect the goods from you? Why can't my supplier get the goods? It's holding up my relationship. When you know that you've given out the money, and now it's really the settlement time that's coming into issue. So most banks like us are on SWIFT, and we have the ability to send SWIFT messages to each other to initiate the payments. But what SWIFT is even introducing itself is something called SWIFT GPI, which means that if I, as a bank or even as a corporate, am on SWIFT, now all of a sudden in the future, and I think within the next 1 year, I'll be able to make settlements to any bank in the world that's also on SWIFT. This means that I don't have to depend anymore on correspondent banks and correspondent relationships in order to make these settlements. Now, of course, you'll keep correspondent relationships alive. It's not cutting that out because you might need confirmation or ease of settlement or document collection, whatever may have you, but it makes it easier for those customers that are dealing with two smaller banks to engage in business rather than relying on the bigger ones. Essentially what this does is reduces the time that it takes for you to make settlement and makes it better. Let's go through the impacts. I feel like this is a smart audience, so I can go ahead with this quickly because I'm running short on time. So I'll talk about the impacts from the view of the customers, banks, and the payments industries. From the customer's perspective, the benefits are obvious and what all the speakers I think are talking about. You have quicker settlement, you have higher payment transparency because you can tell where your payments are, where they're stuck, or who's not doing what they're supposed to do in order for the payment to be done. And you get longer periods of liquidity because your money is less tied up in the process of being paid to you and rather comes to you. For banks, it's higher customer retention and lower customer acquisition cost. I think Wayman Bank did a good job in saying how the brick and mortar is really a terrible way to grow customers. You need to go mobile. And implementing these kinds of solutions will help you retain customers because I'm sure, as most of your marketing departments and banks have told you, it's much cheaper to keep a customer than to acquire a new one. You can do advanced due diligence and make quicker underwriting. I know Alibaba really shocked everyone in China where they started underwriting credit limits for their own customers that are on the e-commerce platform because they can see all the data of who's making settlements, who's making payments, how many transactions are happening. So it also gives banks the leverage to be able to, if they're using the smart contracts, to see who's really wasting time and who's really able to perform what they're doing. And then finally, if you can move in this direction, as the other two speakers have talked about, you can reach those that are underbanked or those that have never been banked. That's crazy and that's fantastic for something like that to happen because it includes everyone that's already in the economy but formalizes the process. And lastly, for the payments industry, I would suggest that this conference is very, very good, that it's focused on making the settlements, fintech, and the e-commerce, but you have to realize that you can stand out and become a leader if you are able to solve not only just the settlement issue, but the entire payment funnel that follows your customers if you think from that perspective. And lastly, which is scary for banks like us, is that people can become in charge of managing people's money and handling the flow without even being a bank. You can simply look at it as an e-money license or a platform, or even if social media like Facebook decided to open bank accounts, I think that would scare a lot of us. So it's either coming up with a partnership or building out your own platform. At Soleil, we are building our own trade fund so that we have a fintech solution to meet the rising needs of our customers. So finally, as a summary, and the 3 takeaway points in case you just walked in, is first, what is your payment funnel in your line of business? I understand that not everyone is in trade finance, nor should they be. It's quite boring, actually. But the important thing is that if you can evaluate your payment funnel, you are able to really bring solutions to your customers, not just about the settlement time. Secondly, how are expectations of clients being managed? We tell our clients, hey, it might take 3-4 days for settlement to happen, and this is why. And this is how we're working to improve. And insofar as you're laying out a plan, I think it could be a good solution for long-term business. And third, how are improved payments improving the community? So we didn't touch about this in the presentation, but a leave behind that as banks, as e-payment processors, as companies, we have a lot of social capital in our disposal, meaning we can really impact and make change. So with the things that you're doing, how are you positively also affecting the community? I think is something that no matter what the conversation is, should be a lingering thought in the boardroom. So I'll be here for the next day and a half before I head back to New York. I look forward to hearing from all of you about your various payment funnels, and please feel free to reach out to me. Anyone who wants a copy of the presentation, even though it's mostly words and listening to me, is welcome to ask for so, and I'm really glad to be here, and thank you for your time.
Thank you very much. Any questions, anyone? Let me ask you something while many people think about the question I asked. So I'm assuming that you process huge payments, not the usual everyday.
Yeah.
How much of that can be driven through mobile platforms, online platforms and stuff like that?
So it's just about the comfortability of the clients. I mean, our general payments for our clients range anywhere from $40,000, $50,000 of payment to a few $100,000 of payment. So it's serious sums of money that these people need to happen. In the US, for example, we've moved to where people can even apply for mortgages on their phone, meaning they can take out multi-$100,000 loans on their phones. And business and entrepreneurs have become sophisticated. They know that whether they're making a $5 purchase or a $500,000 purchase, what's happening behind the scenes is the same. And it's getting to a level where customers are comfortable that the bank has built out a platform where you can exchange in high sums without the need to visit your bank officer.
All right. Any questions? I can see a hand here. There's another one back there. So take that one and then come to you, sir.
Thank you so much for the presentation. My name is Bernard. I work with the Trade Finance Department of Energy Commercial Bank. I heard you mention Swift GPI.
Yeah.
Then I know for us banks, we have relationship with overseas banks. That when we want to make payments, we instruct them to move the funds to where we want the funds to go. I want you to throw more light on the Swift GPI because I heard you mention that it will sort of do away with the relationship with the overseas banks.
Right, so for example, if you wanted to make a payment to our bank, you would instruct your correspondent bank, whether it be in America or Europe or wherever, to then further credit our account. With Swift GPI, because we're all trusted on the Swift platform, you could send that credit directly to me, and then I could tell the customer the same. While in the background, the settlements happen with wherever the money is. So the time that it takes for the actual payment to be credited into my customer's account is shortened by the amount of time it takes for the different correspondent banks involved. And the second thing it does, it gives transparency between you and me as to where the money actually is without having to go to the correspondent bank and query where the funds might be stuck. So sometimes when the funds go to a bank and there's some issues, whether KYC or due diligence or whether it's the right account for the funds to be applied to, this way you and I have direct engagement on not only, like for example, a system message of 998 or 799 between us, but the actual 103 where we can determine what the issue with the payment might be.
Right. What it means is that then the cover or the credit would have to go to the corresponding bank.
Sorry, could you repeat that? I couldn't understand.
If I send a direct 103 to, let's say, Soleil-Chartered-bank,
Yeah.
but I have my funds in my corresponding bank, let's say Ghana International Bank in the UK.
Yeah.
So I would have to send the cover or the credit for that transaction to
So a comment on that transaction could be automatically generated and sent to the correspondent bank. So it's not that you and I would have to hold each other's money, it would just show the credit is happening directly and the comment would both go to the correspondent. So it doesn't eliminate the correspondent bank relationship, but what it does is that it makes the payments easier between you and I when customers want settlement.
All right, right here. Here, sorry, at the front.
Good morning, and thank you for your presentation. My name is Remy. I work with Unity Bank in Nigeria. I spent like 8 years in payments, international operations, I would call it. And this is good. What I see is good. This is not. It's also to reduce some form of payments and fees between the corresponding banks and all of that. But back here in this part of the world, where I see more of the challenges is actually connecting where the production of these goods are to the people they are selling to. One of the things that has helped Nigeria is bringing payments to the grassroots, where payments are able to be done from mobile and all of that. So talking to the people where the products actually being derived from, who actually see themselves so far away from the destination or the sources of the businesses. How much do you think banks should get involved in bringing this closer to the sources so that they can also have some form of real-time connection to the destination?
So if I understand the question correctly, it's how banks can help bring the end customers closer to the products.
Yeah, talking about the last thing, the effect of this to the community. In the last one, in your summary, you talked about the effect of this to the community. So how much do you think banks should get involved in bringing these people closer to the source so that they can also feel this thing?
Okay, yeah, understood. So I think what banks are already doing, at least with some of the banks that we have relationships in West Africa, is that they already engage in the collateral management in the warehouses when the goods show up. And I think also what it means for banks is that when they can employ these smart contracts and customers come to them, they can also tell their customers who they think are suppliers that are good. In the sense, not making a business recommendation on you should go with XYZ supplier, but that these are the people that we manage from, and it's a stamp of approval from the bank side that these goods are okay. I think from a bank's perspective, it's really a governance and risky issue to say whether or not you endorse a business, because you can't be aligned with some businesses and not another. But if banks are to take on the social responsibility that their business brings, I think you would need to have some of that kind of accountability. But that's a kind of decision that would need to come from, you know, the chairman or the governance or the moral, philosophical, you know, going back to my philosophy degree, view of how the bank wants to approach it. Some will just be in it for the cash and carry warehouse management business, and others might think, no, we will only use customers who are good with the settlements, who also are using the smart contracts, who have these verified suppliers, who engage in an ecosystem whereby we don't have customers and clients that don't deliver on their promises. But it's more of a cultural dynamic than I think a bottom business balance sheet decision kind of thing.
All right, any more? Maybe one more question. All right, thank you very much.
Thank you, everybody.